tax proposal of the Mr. Sayee Mohan, who has more than 30 years of experience in industrial and consulting experience, is handling all indirect tax matters on central excise, customs, GST, 100% UAE schemes, and SEZ matters, which also includes foreign trade policy, FEMA and RBI related matters. So he specializes in automotive sector and he is involved in advising clients in all indirect tax matters affecting automotive sector. He also advised in claiming various export incentives such as brand rate drawback, other export promotion schemes under foreign trade policy. He is also involved in bonded warehouse for a large automotive company to operate under in-bond manufacture under a newly introduced MWOWR scheme in October 2019. In Deloitte, Sayee has handled many various assignments, which also includes both in domestic as well as MNC clients. And he also involved in contract and transaction structuring, planning reviews, and compliance review. He has assisted clients in claiming various export benefits granted by Government of India and obtaining approval in setting up export warehouse for availing customs duty concessions. Sayee Mohan is a member of Institute of Company Secretaries of India. He also holds a bachelor degree in commerce. He made several presentations organized by trade bodies. After the present government has one of the significant reform made is on GST. So we have crossed more than 5 years. Now government is surged with more than 1.5 lakh crores of GST collections per month. So with this backdrop, government was, everyone was expecting more of on GST. Let us hear more from Mr. Sayee Mohan.
Thank you, Senthil. Good morning to all of you. So very minimal changes have happened in the budget with regard to the indirect taxes. So I go with Ankit as far as with regard to changes in the budget, because the entire GST or the indirect tax proposals are now totally notification-driven legislations where you don't need a budgetary changes. But however, wherever there's a requirement to change the legislation, so it has to go through the parliamentary process. So with that, they have made it some changes in cosmetic changes in GST law as well as the customs law. So in this, as Senthil was mentioning, is now more than 5.5 years of journey in the new tax regime GST. Whether it has really achieved the objective of its introduction, yes, it is. There are a lot of changes. There's a paradigm shift with regard to the online automated solutions, with regard to the filing of returns on ease of doing business, and structural changes with regard to the taxation rates and slabs, especially the constitution of tribunals. Unfortunately, under the GST law, the tribunal is not established because this Madras High Court has struck down as unconstitutional because of some certain basic requirement with regard to the members, technical and judicial members requirement and the educational qualification and experience. On that ground, this was struck down as unconstitutional, and the Ministry of Finance has set up a committee to analyze and evaluate and how the tribunal has to be established as soon. But in the absence of a tribunal, the litigation process under the GST law stops at Commissioner Appeals level, and beyond which, if one wants to go, one has to take the route of jurisdiction of the High Court and Supreme Court, where the question of law is involved. So that one, and there are certain grey areas like the whatever the changes that happened in the corporate tax and the online gaming. I think that is also coming under the purview of under the GST, and especially the valuation with regard to the gaming. What is the gross receipts under the gaming solutions is also a challenge. I think that in the next GST Council meeting, which is likely to take place at Delhi on 18th February, they are going to discuss these two crucial aspects. Nonetheless, as I said, as Madam Sugana was also mentioning in the initial part of the conversation, that GST, under the GST e-invoice is one of the major reforms, so which is a very sensitive area that has been completely settled, and there's no without any invoice, no supply of services or goods can happen. So with this few background on the where we are today in GST, let me take you through the changes in the legislations, only to make certain cosmetic changes to remove anomaly or to, in the light of the judicial decisions, they have made the changes. See, the first change is that any supply services through online data retrieval or the services, where the definition was there, the minimal human intervention is the one wording is available, but now they have removed that minimal human intervention. With that change, even unregistered supply, unregistered person who is receiving the supply, even the B2C, through the online retrieval mechanism, is taxable. So the widened the tax base, but how are they going to monitor that with minimal intervention or without minimal intervention or the normal intervention, the human intervention? That's a question needs to be looked into. So that's one change. And of course, e-commerce operators, there is one enabling provision. They can also go for a composition levy. So any supplier who has a turnover of less than 50 lakhs, they can opt for a concessional rate of tax at the 0.5% of the GST composition. So now it is extended to e-commerce. And consequently, they have also increased the penalty, and penal provisions have been inserted in the GST law, where the e-commerce, the platform through which any supply happens through an unregistered person, then that will be the responsibility of the e-commerce platform that they have to take care. Otherwise, it will be treated as a non-compliance, and they have to face the consequences and prosecution under the GST law. This one change that has happened. And there are three scenarios where the GST law has been brought to nil. Rather, there is no levy of GST in three scenarios. One is where the supply of goods from a place outside the non-taxable territory, and the goods doesn't enter India, and it goes to directly to the non-taxable territory. So no GST is leviable. That's one. Second, there are instances of goods imported into India in a warehousing procedure, and then before actually cleared for home consumption, there is a supply. So those supplies, before actual clearance into the domestic market from the warehouse, it is also a scenario where no GST is payable. And third one is the high sea sales transactions. So what happened is, in these three scenarios, 2019 there was a circular which clarifies that this is not taxable, and they made an amendment. But this year they made it retrospectively non-taxable from July 2017 with the introduction of GST, right from the day one of introduction of GST. So because of this, this settles a scenario where if there are no warehouse transaction or inbound transactions, all those kinds of high sea sales, everything is kept outside the purview of GST. So there is an enabling provision. And suppose if because of some litigation, if somebody has paid the tax in the past, of course the government has also clarified that no refund will be given for those categories. So that's very very punitive one. So that they said no refund. And second one is refund is now automated. Any GST input tax credit on account of export is automated, and refund is also given. But the law is now linked to the automatic online portal. With this, if there is any delay on sanctioning the refund, interest will also be automatically calculated and it will be credited to the account. This is a very major one. So because getting a refund for a delayed refund, getting an interest for a delayed refund, it's a big question, especially from the government. Now this has been made automated. I think we'll have to wait and see once the Finance Act becomes a law. I think we have to see how this automatic portal works in crediting the interest where there is a delay in refunds. Reduced to decriminalization of certain offences, especially any preventing the officers from being examining or investigating of any registered person under the GST, or are failing to comply with the provisions of law, or tampering with any evidences. Those were all criminal offences in the past, but now that has been decriminalized, and the monetary limit for making a criminal offence is also increased from 10 million INR to 20 million. So this only very minor changes. And
this automated refund
huh.
is presently, even if it is a baseless refund, but some officer makes an assessment and he does some this thing to make the refund, and we get invariably called.
True, exactly. That is because the ITC reconciliation has to happen. The moment your input tax credit is reflecting in 2A, that will automatically get reflected in your books in GST 3B. So wherever there is a perfect matching, that alone will be given as a refund, and that for that to that effect, the changes also happened in the input tax credit this year. So the major question that arises during the processing of the refund is either the fundamental eligibility for input tax credit, they are reviewing that, and also they are reviewing the reconciliation. If the reconciliation is now automated, so whatever is available on the portal, which is to reflect in your GST 3B, that will be taken care of.
This will be a non-human intervention provision?
Correct. It's a non-human, should be a non-human intervention.
No, I am not asking should be.
It is, as of now, the law says it is a non-human intervention and it is automated once this process is over. But the fundamental eligibility of the input tax credit, the officers are still insisting till now. Let us see once this act is passed.
So, how do you feel this amendment would help a faster refund? Do you feel that?
Even now, we don't find any big differences. It's automatically 90% of the 95% of the input claim refund has been sanctioned within 15 days to 1 month, and then only the 5 or 10% of the credit is given sanctioned post verification of the documents. So that is actually happening now. So we don't find any big challenge in delay in refunds. So that's why the government is very loyal enough. I mean liberty to give that provision in the law itself to say I'll give you credit automatically the interest also if there is a delay. Because that system has more or less is set now.
So what happens if the department issues a deficiency memo?
Yeah, they will issue a deficiency memo where we are supposed to meet them.
Interest will kickstart only when the deficiency is addressed?
It is only after that. Even all processes are completed, including your any queries or clarifications. After that, if there is a delay, then the meter will run only from that date. Yeah, as I said, there are certain other changes. Now the GST returns cannot be filed after the expiry of 3 years. So like any 3B returns or monthly returns of GSTR 1 and 3B, their assessees are now permitted to make their return for the past period, maximum of 3 years. So beyond a period of which we cannot file it, and it will be treated as a non-compliance, and the other provisions relating to non-compliance would become applicable. And that 3-year period is applicable both for GSTR 1, 3B, and also the annual return for GSTR 9 and 9C. And there is another provision. So as I said, that department is having a lot of information with regard to the assessees. So all registered persons, they are having tons of information. The government is now has got the power to exchange those informations available with them with other authorities like income tax and other corporate, all statutory bodies. So that the GST registration, returns, e-invoicing, e-way bill, all those details, everything can be shared to other department as well. So that's a very important thing, that there is an uniformity in targeting the assessees wherever there is a non-compliance or some irregularities. So that's another change.
But even now also they can share. It's a government to government sharing.
It is there. Say like 2019, they have introduced this provision wherein there's mandatory exchange of information. But now this has been retrospectively amended so that 2017 onwards, technically the amendment was made in 2019. With that, the information only from 19 can be shared, but now it can be shared even from 2017. And another change in the input tax credit is there were a lot of confusions with regard to the eligibility of input tax credit on any of the expenditure incurred by the company under the corporate social responsibility. That 135 of the Companies Act provides for CSR. So that credit is any GST paid on CSR initiative is totally not available as a credit. So that is being brought in the part of the law. And the compounding of offences like up to 10 million, has been proposed, this has been omitted. So there are restrictions with regard to the mandatory ceiling, with the compounding of offences has been reduced. With that, wherever there is a minimum liability is there or some contravention, they can go for compounding of offence under the new law. Right. Right. So the customs, now I come to the customs. Under the customs law, there are only two changes have been made. One is Section 25 of the Customs Act, which deals with the exemption from the basic customs duties. See, previously in the last year, there was a change in the section saying that any exemption granted under Section 25 of the Customs Act will be valid only for a period of 3 years. After that, it will be allowed to be lapsed. So there is no extension of such exemptions. So this is only to reduce the exemption categories, also to widen the tax base. But now what happened? There are a lot of scenarios, both under the foreign trade policy and free trade agreements related areas, where it has to be perennial, and those exemptions should continue in the interest of the international trade. So all free trade agreements, concessions and exemptions should continue eternally without any time limit to allow it to lapse. And secondly, any exemptions granted under the foreign trade policy like EPCG scheme or imports from re-imports or export for the purpose of job work, those kind of things have been allowed to be continued to be there always. So they have made an amendment in the current year to say certain categories are kept outside the purview of the time limit, which is always available for any time. So that's the important change. Other than that, I don't have anything to say on the customs rate changes, because there are a lot of changes have made. Almost 190 notifications in the customs have been supposed to be redundant because of its passage of the time. See, more than 35 years has gone, and still that no change has been made in those exemption notifications. So they wanted to gradually withdraw those old notifications, but nonetheless, keeping in view some of the trade interests and representations, they have kept those exemptions for some more time. So because of that, there are certain changes in the extension of the time limit up to 23 or 24, like that, 2023, 2024 and 2025. So there are three categories of three different notifications under which the extension has been given. Apart from that, from the customs duty point of view, the electric vehicles, any import of battery, iron battery and other EV segments for which any components imported, that will be very minimal rate of either 0 rate or 2.5% of the basic customs duty, mainly to make it more attractive and to make in India more robust. So those are the changes that has actually happened in customs. Barring this, not much of changes. We'll have to wait and see how the next council GST meeting is going to bring in some of the changes with regard to the appointment of a tribunal, also the gaming solutions and the taxability. So with this, I'll just close my presentation on GST. Over to you, Sandeep.
Thank you, Sayee Mohan.